Hello and welcome back to my channel. This video is about introduction to bookkeeping, and I will talk about processing cash receipts and payments. This is the second part of this topic. For the first part, I'll put the link down below. Let's start in transferring cash receipts book and discounts allowed daybook to general ledger and subsidiary ledger. So this is the example cash receipts book and discounts allowed daybook that we had in our previous video. Just the same as the other daybooks that we have learned so far, at the end of the period, in this example, it's weekly, the cash receipts book and discounts allowed daybook will be transferred to general ledger and subsidiary ledger. In recording to general ledger, we are only going to record the totals of the columns from the daybooks. First, let's find out the required entries to general ledger, which are the account, amount, and either debit or credit. First, the total of the cash column will go to cash account. The total of the bank column will go to bank account. The total of receivables column will go to RLCA. The total of VAT column will go to VAT account, and the total of the sales column will go to sales account. And then let's transfer the amounts. Now let's find out which side should they go, either debit or credit. To determine this, remember to pay attention which daybook they came from. We are transferring from cash receipts daybook, where we recorded cash sales and cash receipts for receivables. First, cash is an asset, and when we receive cash from the cash sales, it increases and it goes to debit. Next, bank is an asset, and when we receive cash in the bank, it increases and it goes to debit. Next, RLCA is an asset. When we receive payment for receivables, that amount will decrease our receivables, so it goes to credit. Let's do the sales next. Sales is an income, and when we made cash sales, it increases, so it goes to credit. And the last is VAT. It just goes with the sales, so it's credit. Now let's move on to discounts allowed daybook. Each total will be transferred to an account in the general ledger. So let's find out what are those accounts. First, the total of the total or gross column will go to RLCA. Second, the total of the VAT column will go to VAT account. And third, the total of the net column will go to discounts allowed account. Then let's enter the amounts. Next, let's find out which side should I go, either debit or credit. Remember to pay attention to which daybook they came from. We are transferring from discounts allowed daybook, where we recorded discounts that we gave or allowed to our customers. First, RLCA is an asset. When we give discounts to our customers, it means they no longer have to pay for this amount, so our RLCA will decrease and it goes to credit. Let's do the discounts allowed next. Discounts allowed decreases our sale, which is an income, so it goes to debit. And the last, VAT, goes with the discounts allowed, which is debit. In general ledger, the accounts would look like this. Always remember the dual effect. The amount that you enter in the debit should always be equal to the credit. So let me show you an example. In cash account, let's enter the amount. The date is the end of the period. For the details, I will put the title of the account of the opposite entry. So this 300 is equivalent to the VAT and the sales. So we will enter sales and VAT. In some examples, you may see cash receipts book or CRB in the details, but just to show you the dual effect, I'll put the title of the account of the opposite entry. Then let's go to sales and VAT account. Let's enter the amount and the date. And for the details, it's the title of the opposite account, which is cash. Then to the sales account, let's enter the amount and the date. And the details is the title of the opposite entry, which is cash. And then next is the bank account, which is 3,060. So let's go to our bank account. Let's enter the amount and the date. And the details is RLCA, since this amount is the payment that we have received for our receivables. Then in RLCA account, let's enter the same amount and the date. For the details, it's bank. For the discounts allowed, is just the same as what we did with the cash receipts book. So each of this should appear in the general ledger. So I will just show them to you quickly. In RLCA account, let's enter the amount and the date. And for the details, let's enter discounts allowed and VAT, because this amount is equivalent to these two accounts. Then let's go to those two accounts, the discounts allowed. Let's enter the amount and the date, and the details is RLCA. Then let's go to VAT. Let's enter the amount and the dates, and the details is RLCA as well. So we're done recording to general ledger. The next thing to do is to record to subsidiary ledger. I have mentioned this in my previous video, but I will mention it again. Subsidiary ledger is also known as ledger, memorandum ledger, or individual account. Receivables ledger is one common type of subsidiary ledger. It is also known as sales ledger, receivables, or individual customer account. In transferring in receivables ledger from the cash receipts book, we have to record the amount in receivables column of each customer's transaction one by one. And we will enter them to the same side where we enter the RLCA. So the first one is 660, customer A, 22nd of June. Let's go to customer A. Let's enter the amount and the date. And for the details, it's cash receipts book. The next transaction is the cash sales, but as you can see, we don't have any entry in the receivables column. So we won't be recording this to our receivables ledger. Next is 30th of June, customer B, 1,545. Let's go to customer B's account. Let's enter the amount and the date. For the details, it's cash receipts book. Next transaction, 30th of June, customer C, 855. So let's record this to customer C's account. Let's record the amount and the date, and the details is cash receipts book. Next, let's move on to discounts allowed. We only have one transaction and we will record the gross amount. So it's customer C, 45, 30th of June. We will record this to the same side where we record our RLCA as well. Then let's go to customer C's account. Let's enter the amount and the dates. And for the details, it's discounts allowed Daybook. Next is transferring cash payments book and discounts received Daybook to general ledger and subsidiary ledger. This is the cash payment book and discounts received Daybook that we have used in the previous video. Same as the other Daybooks, at the end of the period, in this example is weekly, the cash payment book and discounts allowed Daybook will be transferred to general ledger and subsidiary ledger. In transferring to general ledger, we are only going to record the totals of the columns from the Daybooks. First, let's find out the required entries to General Ledger, which are the accounts, amounts, and either debit or credit. The total of each column of the cash payment book will be transferred to an account in the General Ledger. The expenses column is 0, so we won't be transferring anything to that account. So what are those accounts in the General Ledger? First, the total of the cash column goes to cash account, and the total of the bank column goes to bank account, and the total of the payables column goes to payables ledger control account. The total of VAT column goes to VAT account, and the total of the purchases column goes to purchases account. Next, let's transfer the amounts. Next is to determine whether they go to debit or credit. Let's pay attention to which daybook they came from. We are transferring from cash payments book where we recorded cash purchases and cash payments for our payables. First is cash account. Cash is an asset, and when we make payments, it decreases and it goes to credit. Second is bank account. Bank is an asset, and when we make payments, it decreases and it goes to credit. Third is payables ledger control account, or PLCA. PLCA is a liability, and when we make payment for our payables, that amount will decrease our payables, so it goes to debit. Fourth, let's do the purchases next. Purchases is an expense, and when we make purchases, it increases and it goes to debit. And the last is the VAT account. It just goes with the purchases, which is debit. Then let's move on to discounts received daybook. Each total will be transferred to an account in the general ledger. What are those accounts? First, the total of the gross or total column goes to the PLCA. And then the total of the VAT goes to VAT account, and the total of the net column goes to discounts received account. Then let's transfer the amounts. Next is to determine whether they go to debit or credit. First, let's pay attention to which daybook they came from. We are transferring from discounts received daybook where we recorded discounts that we have received from our suppliers. First is PLCA. PLCA is a liability, and when we receive discounts from our suppliers, it means we no longer have to pay for that amount, so our PLCA will decrease and it goes to debit. Let's do the discounts received account next. Discounts received decreases our purchases, which is an expense, so it goes to credit. And the VAT goes with the discounts allowed, which is credit. In General Ledger, the accounts would look like this. I will show you an example entry. For cash account, let's enter the amount, the date, and the details is the title of the account of the opposite entry. In this case, 360 is equivalent to purchases and VAT. So we will enter purchases and VAT. Then let's go to those two accounts. Let's go to VAT first. Enter the amount and the date, and for the details, it's cash. Then go to purchases next. Enter the amount and the date, and for the details, it's cash. Next is the bank account. Let's enter the amount and the date, and for the details, this amount that is deducted from our bank account is our payment for our payables. So we will enter PLCA. Then let's go to PLCA. Let's enter the amount and the date. And for the details, it's the bank. Then let's move on to discounts received. These details should appear in the general ledger accounts as well. So let's enter them quickly. Let's enter the amount and the date. And for the details, it's discounts received and VAT. Then let's go to those two accounts. Let's go to discounts received. Let's enter the amount and the date. And for the details, it's PLCA. Then let's go to VAT account. Let's enter the amount and the date. And for the details, it's PLCA. Then, after recording to general ledger, we must record to our subsidiary ledger, which is payables ledger. It is also known as purchases ledger, payables, or individual supplier account. From the cash payment book, we have to transfer the amount from payables column of each transaction one by one, and we will enter them to the same side where we entered the PLCA. The first transaction is the cash purchases, and as you can see, we do not have entry in the payables column, so we will not record this to our individual supplier account. Next is supplier A, 30th of June, 1,647.90. So let's go to supplier A. Let's enter the amount and the date, and for the details is cash payment book. Next is supplier B, 30th of June, 570.36. Let's go to supplier B's account. Let's enter the amount and the date, and for the details, it's cash payment book. Then let's do the same to discounts received Daybook. We only have one transaction, and we will record the gross or total amount to the same side where we recorded our PLCA, which is debit. So it's 30th of June, supplier B, 11.64, and let's go to supplier B's account. Let's enter the amount and the date, and for the details, it's discounts received Daybook. Now let's summarize what we have done so far. First, when we have cash receipts transactions, we record them to the books of prime entry, which is called cash receipts book. After a period, we record the totals of the cash receipts book to the general ledger and the individual transaction to the subsidiary ledger. In general ledger, we record to bank account, RLCA, cash account, VAT account, and sales account. In subsidiary ledger, we record in receivables. Next, when we have cash receipts with prompt payment discounts transactions, we record them to the books of prime entry called cash receipts book and discounts allowed Daybook. After a period, we record the total of the cash receipts book and discounts allowed Daybook to general ledger and the individual transaction to the subsidiary ledger. The cash receipts book is the same book where we recorded the cash receipts without discount. And from discounts allowed Daybook to the general ledger, we record in RLCA, VAT, and discounts allowed account. And to subsidiary ledger, we record to receivables. Next, when we have cash payments transactions, we record them to the books of prime entry called cash payment book. After a period, the totals of the cash payment book will be recorded to the general ledger and the individual transaction to subsidiary ledger. In general ledger, we record in bank account, PLCA, cash, VAT, purchases account, and sometimes also in expenses account. In subsidiary ledger, we record in payables. Next is when we have cash payments with prompt payment discounts transactions, we record them to the books of prime entry called cash payment book and discounts received Daybook. After a period, we record the totals of the cash payment book and discounts received Daybook to general ledger and the individual transaction to the subsidiary ledger. The cash payment book is just the same book where we recorded the cash payment without discount. And from discounts received daybook to general ledger, we record in PLCA, VAT, and discounts received account, and in subsidiary ledger, we record in payables. Next, let's move on to integrated cash book. I have mentioned in my previous video that cash receipts book and cash payments book could be in one book, which is cash book. The cash book could be a daybook only or a part of the general ledger, which is what you can see right now. This cash book as a daybook and a part of the general ledger is also called integrated cash book. So what's the difference of the cash book as a daybook from the integrated cash book? Cash book as a daybook only is what I have showed you earlier, where we have to transfer the totals of all the columns to the general ledger. Where in the integrated cash book, the cash book itself is the cash and bank account in the general ledger. That is why it has the debit and credit. It has the balance brought down from the previous month, and the bank and cash column should be balanced, or the total of the debit and credit should be equal. So let's balance the cash and bank column. First, let's insert the balance carried down to the side that has a smaller total, which is credit, and the date is the end of the month. Then let's calculate the amount, which is the difference of the two totals, which is 504 minus 96 equals 408. And both the totals are now balanced. Let's do the same to the bank column. Let's calculate the difference of the two totals and enter the amount to the side that has a smaller total. So it's 15,696 minus 882 equals 14,814. And the two totals are now balanced. Then at the opposite side of the balance carried down is where we will enter the balance brought down, which is debit. The date is the beginning of the following month with the same amount. So this is the closing balance of the bank and cash account. It means we don't need to transfer the cash and bank column to the general ledger. Only the remaining columns should be transferred. And that's it for this video. I hope you find it useful. If you like to watch more videos like this, please don't forget to give us a thumbs up and subscribe to our channel. Thank you for watching.